Hey, good morning, everyone. Welcome to the Macro Snapshot. We are Wednesday, March the 25th, 2026. Okay, so this market, not a huge amount to say in terms of the situation, except for the fact that this market is being driven by headlines. So if we just look at, for example, oil, let's just go through a few markets here quickly. If we look at oil, essentially the idea is that yesterday there was a sort of a headline from one of the Israeli news outlets saying that the US had presented a 15-point plan to Iran, probably via the intermediary of sort of Pakistan. And there's talk that talks will begin potentially on some kind of ceasefire situation in Islamabad in Pakistan tomorrow in Thursday. But the problem is, so initially we have the markets, finding this as a sort of a risk-on kind of tone, relief that there could be some kind of, 30-day truce, some kind of ceasefire, negotiations, de-escalation. Now, that may be the case, but as we saw in the so-called peace talks between Russia and Ukraine, these so-called peace talks can drag on for, 1 month, 3 months, 6 months, 12 months. And the idea that Iran will suddenly roll over in the next 24 hours, I personally think I'm a little bit skeptical, but I don't know because Iran absolutely has been pounded. On the other hand, Iran also still controls the Strait of Hormuz. Global energy supplies are still not coming out of the Strait of Hormuz, and they still hold a trump card, forgive the pun. Uh, I mean, we're getting to, and so what I'm trying to say is that militarily, the US seems to be in charge, but in terms of the leverage, Iran still has plenty. And also, don't forget, Israel is another wild card, there's increasingly, I think, Israel is worried that the US might cut a deal, which may not be the perfect solution or end game for Israel. And we saw that overnight, for example, Israel dropped as many bombs last night as they had in the whole campaign up to this point. So it seems to me that Israel is accelerating, perhaps even a little bit wary of American intentions, and if anything, escalating the situation. So all that to say that this is a headline-driven market, and I personally think the market may start to show a bit more skepticism over the next few days as it becomes clear that this thing is not going to be resolved in the next 24 to 48 hours. However, I could be wrong, so we just have to look at the headlines. Now, in the meantime, what we are seeing, of course, is on some of these big headlines coming out. We see crude oil. This is the WTI contract, sort of having a big sell-off, and definitely this is starting to look as though gravity is taking hold, and it may want to return down to the let's say the early 70s. We'll see. But at the moment, I think this risk premium has a lot of it has been taken out, but I think it's going to take another major breakthrough for this to go down. But if we do get that breakthrough headline, of course, this will trade down. On the other hand, if we look at Brent, a similar kind of situation. But if we look at across the energy complex in general, we can see that gasoline has eased a little bit. If we look at the European nat gas contract, we can see it's eased a little bit. So all of that is very logical reaction to the a cautious optimism that some kind of talks are slowly about to happen, and that for sure the US is looking for an off-ramp and a de-escalation. And probably the reality is Iran is as well, although the public rhetoric is going to remain sort of aggressive. On the other hand, we have a US continuing to build up their troops. We have troops on the way getting towards the Persian Gulf, I think in the next 2 or 3 days. Et cetera, et cetera. So who knows? Maybe the US still has a ground plan, a ground invasion to take one of these sort of strategic islands as their plan, and maybe this is just some kind of cover. Let's pretend to negotiate. And keep in mind that the Iranians have said that they don't want to negotiate with Witkoff or Kushner because they believe that they were stabbed in the back. And remember the negotiations going on about 3 weeks ago. I think in Geneva was the last sort of location of that. And remember that there was negotiations apparently going on in good faith, and then a few hours later, all hell broke loose. So the Iranians are probably justifiably very, very skeptical about any sort of about the good faith of the American negotiators, and in fact have said that they don't want to negotiate with Kushner and Witkoff directly, but rather J.D. Vance and maybe through the intermediary of there's a Pakistani field marshal. Okay, so but as I say, we are waking up to a risk on a kind of sort of vibe. And if we look at, let's say, the bonds, you can see the 2-year bond had a pretty nice rally over the last 48 hours. So, concerns about sort of inflation, they're still elevated and still there, but but some of the hawkish pricing has been taken out a little bit. And you can see there's the 2-year, you see the 5-year also having a nice little rally in the last 12 hours. The headline came out yesterday afternoon about 4:30 or so, and the same with the long end, the ZN and the ZB. So basically, global bonds are having a little bit of a rally. And if we look at, let's say the front end of the German curve on the Schatz, you can see that also has come off its lows. So the ECB, we had Lagarde this morning talking and essentially saying that they were ready to act. And we've had quite a lot of hawkish commentary by ECB governing council members. And essentially, what Lagarde was saying just a couple of hours ago was that they're aware of the sort of the problem which they had back in 2022 and 23, maybe being a little slow to act in combating inflation. And essentially, reading between the lines, Lagarde said in this morning's speech that they would be ready to act quickly, and that all meetings were live meetings at this place. So at this time, so you can see here, like as I said, the front end of the German curve, the Schatz has risen, given back a little bit over the last couple of hours here. But essentially, the market now pricing in about 3 hikes for 2026. That's down from 4 hikes. So, a little bit of pressure has come off. Just while we're in the European bond space, it is interesting. Something which I've been highlighting for the last 6 or 12 months or so, has just been how well the Italian bonds have been performing on a historical basis. And this is the spread between the Italian 10-year yield and the German 10-year yield. And as you can see, this has just been a one-way traffic in favor of Italy. So basically, the Italian yields getting much, much closer to the German yields, almost down to a very small premium of 60 basis points. And that was on perceived, sort of political stability in Italy, and also some kind of fiscal stability, fiscal discipline. But it's just interesting to note that once the war started, you can see here, and literally on the day the war started, which is essentially this weekend down here at the end of February, beginning of March, you can see that it's been a bit choppy, but essentially that premium, 40 basis points, has sort of gone back on. So we've gone to a premium of plus 60 basis points to up to 1%, so 100 basis points. So just interesting to note that the German bunds in this case have actually sort of rebounded against the Italian BTPs on some kind of sort of safe haven flow. So interesting, just in times of real stress, you can see here the Italian bonds do actually underperform still, as they have done historically against the German bonds. So we'll see, if there's a peace dividend for Italy, will this sort of go back down towards the 60 basis points? And that's interesting to see if that's going to be the case. Although keep in mind that Prime Minister Meloni, while we're on Italy, she did lose a referendum over the weekend. So there's been a couple of sort of ministers who've resigned or been forced to resign. So there are some cracks starting to appear in her sort of governing coalition over there. So maybe that whole narrative of sort of stability, political stability in Italy is starting to fracture just a little bit. We'll have to keep an eye on that. Although, of course, there are other things to be keeping an eye on in the short term. As I say, just in terms of the Iran-US talks, there is sort of rumors going around that will be in Pakistan, Islamabad, sort of Thursday. So what's that, tomorrow? And again, I think the market we're going to have very choppy headline-driven markets. But just getting back to the reaction, as you can see here, if we just look at the some of the stir markets, you can see here a little bit of a bounce. And let's say this is the September contract. So again, that sort of positivity. You can see energy we looked at, and again, pretty sort of clear reaction. You can see that the dollar is starting to trade a little bit heavily, and you see these big red candles we've seen in the last couple of days. Just on that sort of increased optimism. So, very much everything, the correlations are still very tight. Any sort of perceived sort of ceasefires or positive news, the dollar is going down, the yields are going down, equities are getting a bounce, and US treasuries are getting a bounce, and also let's say something like the euro taking advantage of that and bouncing. Although, as you can see here, a little bit of skepticism and nerves coming back into the market, and it's not all one-way traffic. So that's what we can expect. And now getting back onto the metals. We can see that yesterday I was looking at that. Gold continues, it bounced off this 200-day moving average here, which was all the way down there, which was also the horizontal resistance. So gold continued to push higher. And again, The conditions, if the war does hopefully come to some kind of sort of ceasefire or grinds to a stop at some point, the market will start to refocus on the macro factors, and those macro factors haven't really gone away. We still have massive deficits in the US. We have issuance. We have very, very sticky inflation, and the inflation, if anything, will be even worse, of course, as we still continue to get these follow-throughs in the elevated energy and food prices and fertilizer. And so these are all good conditions for gold. And so it looks as though the dip buyers are coming in. Similar kind of situation in silver, not quite a strong a bounce, but we're still getting that. Also with the risk on, we're getting copper starting to move off the highs, starting to push higher. And if we get any sort of cessation of hostilities, I do believe that copper, that could have a pretty nice bounce. BTC, as I mentioned yesterday, is, potentially is this inside of some kind of bear flag, or actually is this just, a series of higher lows? Grinding again, not fabulously impressive price action at all overnight compared to, let's say, gold or silver or even the equities. But nonetheless, BTC sort of hanging in there. And again, the big test for this is going to be that $73,500 level. Well, let's just keep an eye on that. Now, getting back to the equities, let's have a look at volatility. Volatility is actually down. You can see here, still elevated though. 26 is still a very elevated vol, but off the worst level. So at the margin, that's not bad for equities. If we look at the ES, as you can see, up 88 basis points since the open. So this is, again, bounced off its highs. So let's hold on just a second here. Just want to look at some of these moving averages. So if we look at the EMAs here, you can see maybe the next overhead target could be the 200-day EMA. We're not quite there yet. And again, keep in mind that although this is a nice bounce, it's still in the context of what's happened over the last, sort of 2 or 3 weeks, fairly modest. At this point, this is still a fragile market. I just want to say that if we because the key point is that, well, these 15 points, some of the points which the Americans are demanding is, opening the Strait of Hormuz, no missiles, no proxy allies in the neighborhood, no funding of proxy groups in the Middle East and in the Gulf. A complete dismantling of their nuclear program or their, bellicose, their sort of a warlike nuclear program. These are all very, 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 very substantial concessions, which, I think the Iranians are not going to give up without a fight. They know they have leverage over global energy markets, and I think the Iranians are not going to sit down in Islamabad, if indeed that meeting happens tomorrow, and say, "Oh yeah, absolutely, you guys have pounded us into dust. Where do we sign?" I think this is going to be a multi-week negotiation. That's my personal view, but we'll see. So my point is that these markets are remaining a little bit fragile. Any sign of deterioration or even escalation or any sort of bad news, I think we could retest the lows. But at this point, let's go with the positivity, a bit of a positive vibe today. And for sure, this could retest at least up to maybe this 200-day EMA, which is around about 67.30, or even that recent high, 67.43. I think that's the next target. Similar kind of situation here on the NASDAQ, bouncing. Russell as well, up 95 basis points. So, all of the US equities doing their thing, pretty happy. If we look over in Europe, let's just look at the Euro stocks, an even more aggressive bounce upwards, 1.64%. So very nice, snapback over in Europe. If we look at the DAX, 1.76, the German index. If we look at the Nikkei, up 2.8%. So the point is that global equity, which had been more beaten down than the US, also doing very well. If we look at over in Australia, also having a nice bounce at a 1.87%. Although keep in mind, Australia, it's a typical example. There's now a talk coming out of Australia that a lot of sort of petrol stations, gas stations are essentially, they've run dry. And therefore are not able to service their customers. And Australia, as we know, imports about 80% of its refined energy products. So that's the kind of pressure which some of these countries in Asia, East Asia, South Asia, there's sort of Asia Pacific, which they're under because just the refined products are not getting through. Remember, there's one thing to have the crude maybe leaving or not, 100% impacted. But the problem is that the refined products, there's just a lack of fuel stock, blend stock, and that's starting to make itself felt in countries like Australia, Thailand, South Korea, these kind of countries under quite a lot of pressure. So that's it, guys. As I say, not a huge amount of specific data or anything today in terms of macro data. Let's keep an eye out for speakers. We had quite a lot of ECB speakers, in general fairly hawkish, and so the general tone at the moment is, central banks still concerned about sticky inflation, but seeking more information. They want to know if this sort of Iran problem is going to go away quickly, in which case, maybe inflation, energy-based inflation will come down. And of course, every other market is in strict correlation, essentially trading off the oil situation, the energy situation, and now the prospects for sort of some kind of ceasefire and negotiation. The market seems to be sniffing that out. What the market is telling us is that, the war, although the ending may be messy, is nonetheless coming to an ending. And that seems to be the general narrative. So if that's the case, this is going to be positive for equities, for risk assets, for sort of a riskier sort of FX. It's got to be a negative for the dollar index. Yields are going to go down. Bonds are going to go up. The curve will probably start steepening a little bit. We'll get an unwind of that flattening. And possibly, maybe not even at this point, but maybe even emerging markets, which had been doing very well, maybe they will start to bounce a little bit as well. As you can see, they've been absolutely brutalized by this situation. But if we do get a sense that, sort of the dollar is weakening, that global yields are going down, energy, which a lot of the emerging markets, some of them are sellers, but a lot of them are buyers, that will be a positive as well. So there could be some buying opportunities, but as I say, this is going to be very much dependent on what happens when and if we get sort of a substantial good news, permanent good news on any putative sort of negotiations between the US and Iran. And keep in mind, Israel overnight, as I said, absolutely did 4x what they've actually already dropped. They dropped 15,000 bombs on Iran overnight, 15,000 bombs. So I think if anything, Israel may be fearful of an early end to the war because they haven't achieved their objectives, and they may actually escalate. And who knows, maybe they'll escalate in a way which could cause sort of problems. And don't forget, the American Marines are steaming towards the Middle East, so there could be one final sort of a chapter involving those strategic islands like Qesem and Karg Island in the Persian Gulf and the Strait of Hormuz, which could lead to all kinds of complications. So let's see how we go over the next 2 or 3 days. Take care, guys. Have a great trading day, and I'll be back tomorrow, if all goes well, with the macro snapshot from the Macro Shop on Twitter. Thanks very much. Have a great day.